during the last mid-year summit we did last June, the call was to be more conservative. I think we were in favor more of money market. It was more appropriate. You would have protected your portfolio if you had a balanced strategy during that time. I mean, if you followed us, meron kang money market, fixed income, and maybe a little bit of equities, medyo safe ang portfolio mo in that mix. And compared to like a pure equity, which went down by about more than 6%. But if you have balanced portfolio, medyo flattish ka, medyo safe. But now, the markets have priced in a lot, and looks like things are probably could get better next year. So for the global outlook, based on the discussions we had yesterday, looks like markets are going to be better. Both bonds and equities, they can do better next year. We just need to watch out for the inflation, though if in fact it has been addressed, and how the Fed would manage interest rates accordingly. The view of our experts that we discussed yesterday and today is that the recession could only be shallow, and investing opportunities for riskier assets are opening up. So for the Philippine equities outlook, Philippine market discussion today, we're expecting solid growth still. Economy will be back on track after COVID, but we will have challenges like rising costs, interest rates, and their fiscal position. And GDP could slow down, but still grow. And there's still an issue on the effects of the weaker exchange rate. So what to do? Advice for retail investors. Investors cannot overlook that interest rates are already attractive. The government bonds providing very good yields. For an investor, now is the time to shift from your money market funds to riskier assets like long-term bonds, and slowly shifting also to equities with increasing exposure to global equities as well. Pwede nang gawin yan sa COL Financial. You can access global funds as well in the platform, because we expect the global markets to lead, and then for local markets also to follow. Now, for my tactical asset allocation, which I presented the last time, now we'd like to present to you what shifts or rebalancing we will have for the next 3 to 6 months. For the tactical allocation, just to clarify, these are tactical. These are strategies given what we have today and what could be happening for the next 3 to 6 months, as compared to like a strategic allocation, which is more long-term in nature. So for tactical, looks like fixed income is the asset class of choice right now. No, giving you good yields. For your equities portfolio, those who have equities, review them. Review your holdings as what April has suggested, and concentrate on those that may not be vulnerable to high interest rates and the weak peso. Look at the banks, diba? Look at these stocks that may remain resilient. And then shift portfolios having a multi-asset approach this time, diba? Parang let's not get stuck with local stocks lang. Let's look at it more of a multi-asset strategy, both local and global. COL Financial has now allowed us to do multi-asset investing. That's why we're having this summit for you, so that you can have all of these options. You can balance your portfolio and always diversify to manage risks in case there's a change and might not go as anticipated, no? So that you can still have the management of the risk through a diversified portfolio. Now, for my asset allocation strategy, I'm considered a what you call an aggressive investor. But despite an aggressive investor, I still balance my portfolio. No, considered an aggressive investor. I already have an emergency fund. I invest for the long term. I'm not worried about the short-term volatilities, and despite my aggressiveness, I still balance my portfolio. no? Like what the result of the survey of our sentiment yesterday, no? My top consideration is steady growth with medium risk and some investments with regular income and dividends. So I have this 60-40 portfolio, but still in favor of fixed income. Even if I'm aggressive, I still have a higher weight on fixed income simply because the fixed income market has better opportunities, a little better or a little safer, diba? I will lessen now my money market fund from just 10%. Before it was 30% the last time I spoke in June. And but still keeping some short-term investments for any possible downturn in preparation for further deployment. We will send you what specific money market fund you can look at. There's a Sun Life money market fund, the ALFM money market fund for that. And then I will increase my bond exposure to 50%. It used to be like 30. Then so that I can ride a higher yield on an accrual-based bond fund, like an ALFM bond fund, an ATM corporate bond fund, and diversify also in global bond funds. As you know, market values of bond funds improve during declining interest rates, and it's also less volatile and good enough to address my needs in the next 3 to 5 years. We will send you also what specific bond funds are available. There are global bond funds that are available in the platform. And for equities naman, I will have a more balanced portfolio of a 20% in global equities, like global REITs, and then 20% in local equity index funds. So that could be a more balanced portfolio as a 60-40 investment. Now, for those who have lower risk appetite than myself, those who are moderate investors, a portfolio of 70% and 30% mix in favor of fixed income could be ideal. Money market at 20% from last June of 40%, bring it down. So shift now to increase in bond funds to 50% from only 30% the last time. While equities will be at about 15% evenly matched with global investments at 15% as well. Now, for the most conservative, yung talagang those who cannot sleep well at night due to the volatility, an 80-20 mix will be considered more applicable for you. Now, 30% money market from a high of 50% still last June, and then now move to bond funds at 50% from only 30% last June. But start also accumulating as well buy equities at 10% each for local and global investments. A portfolio like this will substantially minimize the volatility for your portfolio. Okay, once again, these are tactical portfolios. They have done well from the last time, and hope we can have a more balanced portfolio for the coming 3 to 6 months. Remember, guys, these are just tactical strategies given today's environment. I could also be wrong, but this gives you more or less a balanced portfolio. Investing is always for the long term, and regular rebalancing portfolios is needed to align with the markets and where you are in your investment journey. If you're fully invested in local stocks, an approach in investing in new asset classes like global investments or bonds will be to use a peso cost averaging. So yung mga bagong cash mo dyan, you start doing peso cost averaging on these other investment outlets we have invited you to consider. Just maybe regular weekly or monthly basis to average your cost. And then always have a diversified now with local and global so that we can help you reach your investment goals. Okay, we will also be sharing these discussions with you in a more detailed way in key takeaways. And we will be sending these strategies to your emails so that you can remember all of them. All right. I think we've finished our time allotted for today. We had 2 days of multi-asset investing, and hope that you've gotten some views that 2023 could really be a year of opportunity after all of this pandemic. And now, hopefully, we've given you some ideas, given you the shared from our experts, from the global expert, from local experts, from all of these discussions, very interesting discussions. and hope you are able to get some ideas on what to do next.